guys, welcome to Silicon Valley Girl. As a person who started investing in March 2020, 2022 is the worst year for my portfolio, and this year I'm losing tens of thousands of dollars. I'm thinking, what if I hadn't started investing? What if instead of investing, I just traveled and enjoy life? We're officially in a bear market. A bear market describes a condition on the market when securities prices fall over 20%. S&P 500 recently fell by 21%. The Dow Jones fell by more than 15% since the start of this year, which is the biggest drop for a period since 1962. Bitcoin is trading at around $23,000 at the time of filming this video. It fell below $20,000, and I remember buying Bitcoin for almost $60,000. I think I picked a good day to buy crypto. So Bitcoin today, $60,000. My next question is, what's going to happen to the housing market? As you know, I recently got approved for a mortgage, 1.5 million, and we've been looking at different locations, and one of the locations we really liked was Miami, and I shared the idea of investing in a condo in Miami with my financial advisor. He said that Florida condo market took a big hit during the financial crisis, and in general, when we look at the markets that are more like vacation rentals, Florida, Palm Springs, they get the worst hit during recessions. And markets like Silicon Valley and New York tend to perform better. And at the end of this video, I'm going to tell you how I'm going to use this information to invest in 2022. So please make sure you stay up to the very end. Now, when all of this started and I started looking at my portfolios, I don't know what you guys felt, but as a beginner investor, my initial thoughts were, why would I even invest to just lose all the money? I could have bought jewelry. I could have gone on a trip. I could have spent this money on my kids instead of buying stocks and just losing that money. But I think this is an initial thought that everyone who just started investing has in these situations when markets go down. And just being honest here, I was really lucky to start investing in March 2020 when the markets were down. So I see this year as a lesson for myself as a beginner investor to focus on a bigger picture versus focusing on what's going with my portfolio right now. This year teaches me that the value of my investments is gonna fall and it's gonna rise. It teaches me to stay consistent, and actually my financial advisor is teaching me to stay consistent, because I think in March I was like, let's stop investing, let's just wait. And he was like, Marina, you need to stay consistent because you never know when the market's gonna turn and no one can really predict it. If you have the same feelings, let's just look at something very encouraging. Here's the history of S&P 500 from 1926 to 2019. Yes, it faced a few bear markets in the past, with the biggest crisis in 1929 and 2008. However, you see how fast the market has recovered. But you might say, yes, this is for S&P 500. Marina, look at Dow Jones in 1929. It has declined by over 90%, and it looks like it would have taken around 25 years to just break even. But if you account for deflation and dividends, you would actually break even in 4.5 years if you did not panic sell. Now let's talk about the recession. Recession is a term that we used when the GDP declines for 2 consecutive quarters. There are certain ways to track GDP in real time, and GDP now actually says that the second quarter is running at 2.1% negative. The first quarter's decline was 1.6%, which means if this data is true, we're actually in the recession. A recession means less jobs, less production, less output, and the general cooling off of the economy. Now, why is this happening? Our current inflation rate is 9%. Compare this to 1.9 in 2018, 2.3 in 2019. This is happening because the US printed a lot of money in 2020 and 2021. Now, in order to cool things off, the Fed raises the rate. This rate affects the entire economy. If it's more expensive for people and companies to get loans, they purchase less, they produce less, they do less economic activities. Mortgage gets more expensive, car loans get more expensive, business loans become more expensive. And there is negative correlation between the Fed rate and the stock market. So if the rate goes up, stock market goes down. And now people are expecting even higher rates in August and September. And this is why everyone keeps talking about this potential crash. Because the Fed has to tame the inflation, which is super high. And the way to tame it is to raise the rates. But if they raise the rates like crazy, the stock market goes down, people start buying less real estate, and there would definitely be more inventory on the market, and the prices might go down. But before I show you my current portfolio, big thanks to Webull for sponsoring this video. Webull is an app that I use for buying stocks. It provides commission-free US stock, ETF, and crypto trading with no inactivity fees. The account opening is seamless, fully digital, and really fast. The trading platforms are well structured and user-friendly with many order types. You can use Webull on any device. I normally use it on my iPhone. It's optimized for mobile, tablet, desktop, and web versions. If you are new to investing, it could be quite intimidating to buy your first stock or an ETF. And although Webull has a really user-friendly interface, they also have paper trading functions for new investors. Basically, you can practice buying and selling stocks and options without risking real money in the live market. Both stocks and options are available. And of course, you can buy fractional shares on Webull. Use my link in the description box to open a Webull account. And when you deposit just 1 cent, you can get 6 free stocks of a maximum value of $12,400. The minimum of $34 worth of stocks is actually guaranteed. So you invest 1 cent and you get a minimum of $34 worth of stocks on your account with Webull if you use my link in the description box below. I honestly think it's a great offer, and I've been a user of Webull for over 2 years, so I highly recommend Webull for your future investments. Let me give you an update on my portfolio and investment plans for 2022. Right now, my portfolio is 50% cash, and the goal is to keep investing until I reach 20% cash. The best strategy that works for me is dollar cost averaging, which means investing monthly in a portfolio that I'm about to show you. So we're buying short-term corporate bonds. We're buying growth ETFs, meaning stocks of companies that grow really fast. Most of those are IT. We're investing in value ETF, meaning companies that are established on the market. We're investing in small cap, we're investing in international bonds, and we're also investing in real estate ETFs. And on the screen right now, you can see the proportions in which we're investing. We're investing every month, we're doing dollar cost averaging, but the plan is to still have a lot in cash in September and October. Again, you can't really predict things, but a lot of people keep talking about this big crash in September, October, November. Looking at geopolitical situation, it looks like winter is going to be pretty hard for all of us. So the plan is to continue with dollar cost averaging because you can't time the market, but at the same time, have cash available in case things go south, because I really want to finally buy a first piece of real estate. So what I'm doing every day, I have filters set up on Zillow. I'm looking at Miami, I'm looking at the area where we live, and I'm looking at Los Angeles. And I'm just tracking how long houses are staying in the market. I am asking myself, would I buy this house? And in a couple of weeks, I check back on that house to see whether it has sold or if it's still in the market. If you remember, a year ago, we were touring apartments in Danville and we were looking at houses in Pacifica. So what I'm noticing right now is that there are so many houses in Pacifica. They're selling with a discount. There are so many condos in Danville and they're selling with discounts, or they just sit in the market for a month. This is just an indicator that it's going to be hard to sell the condo or the house if we decide to do that later. So it's just me educating myself on the market to be able to spot the downward trend if we would hit. If not, the plan is anyway to buy within the next year when we find something that we fall in love with. I don't want to do this, but let's do it. You have to do it. I don't know about you guys, but I do my finances every month. So let's take a look at how my portfolios are doing. I want to start with the one that's the oldest. So I started investing, as I mentioned, March 2020. This is when I started my brokerage account, and I started buying into S&P 500. And honestly, I was so proud of myself most of the times because it was, at some stage, it was 33% up. Today, it's almost 5% down. Like all of the profits that I've built up since 2020 are now gone. It's okay, it happens, and this is how you learn. There is another portfolio that I have with Webull. So that portfolio is mostly me buying stocks of companies that I believe in, and I also started in early 2020. And I started with buying Formula One stocks because my husband is a Formula 4 driver and he's a huge fan of Formula One. And when he saw Formula One stocks losing a ton of value, he said, we need to buy in because I believe in this. And this is one of my most profitable positions here. And Google stocks have been doing pretty well. And I remember the moment when we were in Turkey on vacation and I saw Google falling and falling. I think it was August 2020 and I decided to buy Google because I believe in Google and YouTube gives me so many opportunities. I want to buy in that company. So Google stocks have been showing pretty stable growth. And actually this account has generated 8% for me, which is pretty cool, right? I think it's the only one of all of my portfolios that is actually generating profits these days. My crypto portfolio is down 37%. And the portfolio I started building this year with my financial advisor is down 3.7%. First of all, I am grateful that I am experiencing a crisis when I'm 32 versus if I started investing at 70 and this is the money I wanted to retire with and then the market falls down. Now I know what it feels like. And because I know what it feels like, I also want to have more assets in real estate. Just because it's not the value that you can track every day. Yes, it provides less liquidity, but at least you know that even if everything falls, you have this place where you can live. It just gives you this extra peace of mind. And another feeling that I have when I see like losing tens of thousands of dollars on my investments is also I need to enjoy life more. Because my strategy before was I'm not gonna buy something extra because I want to invest. I'm not gonna do this, I'm not gonna travel because I want to invest. I think the truth is somewhere in the middle. It is great to invest like 30% of your income or whatever you set for yourself, but it's also very important to realize that we only have one life. Our kids are only small now, then they're gonna grow up and we're not gonna get this time back. We only get to travel actively when we're young because we won't have enough energy later on. Our family is here and now. So now if I have a choice, invest an extra $5,000 or go on a trip with my family, spend more time with my kids, I would definitely select the second option because I know how fast investments lose their value and how we can really not get our time back. And it's up to you which mentality you follow. I know some bloggers are like invest, and live a frugal life. I'm more in the middle. Invest, but also make sure you enjoy your life and enjoy people who surround you. Basically, if we look at my portfolio, almost every single position is down this year. Everything I bought last year and at the beginning of this year is at marginal loss. Also, part of my assets are now in startups and different funds run by people I know here in Silicon Valley. It's less than 5% of my portfolio, and this is a super risky investment. But by the way, this is one of the investments that I feel good about at the time of recession because, well, it doesn't really lose in value because it's all on paper. And just seeing entrepreneurs that I support thrive and seeing their success and realizing I'm a really, really small part of what they're doing actually gives me this good feeling versus the stock market that is just giving me bad feelings these days. But again, I see it as a great lesson for me as an investor because I plan to invest, I plan on holding, and I think the strategy is to keep investing in order to be able to live off the investment income in the next, hopefully 5 to 10 years. So just to sum it up, the overall plan for this year is to continue dollar cost averaging, but also making sure that I have enough cash in case things go south later this year so I can buy into real estate and have enough money for a down payment, and so I could continue buying into stock market. And before we finish, let's just take a look at S&P 500 again. It faced quite a few drops, but every time it not just recovered, but gained in price. So I'm planning to continue on investing. Thank you guys so much for watching this video up to the very end. Please share your emotions in comments below. Please share what you feel as a beginner investor, what you feel as a professional investor. If you're watching this video, by the way, thank you so much if you're a professional investor watching my videos, because I'm still a beginner, just sharing my experience here on this channel and hoping to inspire you guys to learn more about financial markets and our economy. Thank you so much for watching this video up to the very end. See you very soon, and follow me on Instagram, Lingua Marina. And don't forget that you can get 6 free stocks up to $12,400 in value if you start an account with Webull and deposit as little as 1 cent. The link is in the description box.